Good evening and welcome back to Be Rich. Today I have my good friend and nephew Shashwat Swaminathan with me, and I wanted to discuss private equity because everybody in this world is talking of tech. So we wanted to see how tech evolved and how private equity started. Today they are listed private equity companies like Blackstone and many more. But there was a time when it was not so complicated and it was not so shady. Things were simple and people were willing to take risks. And the people who started the companies were also genuine and they had genuinely good ideas which changed the world. Without capital venture capitalists, you wouldn't have had companies like Microsoft, Apple, Intel, three companies which changed the world in my lifetime. So we are going to take a look and go back into history and let's see what Shashwat has for us. Shashwat, you take over.
Yeah. Uh, First, I want to give you some data points. So, today, private equity manages around $10 trillion, and private equity accounts for 25% of global mergers and acquisition activity. Around 30% of total credit is now financed through private equity, with 200. So, with firms having $200 billion in reserves to 1,000 billion in lending to other private equity or any other firms. So there's a 1:5 ratio, and Blackstone had done a historic deal where they lent $4 billion in debt financing to H&F and Primera, two other private equity firms, to buy a software company called Zendesk. So, with that out of the way, first I want to ask you, how did private equity start and when?
See, it started in the late 70s or early 80s.
Yeah.
I think the first one to start with private equity was HP, and then it caught on. Texas Instrument also had some private equity. But in those days, there was a big group of venture capitalists who sat together and prepared checks
Yes.
and started companies. The first known to me biggest guy who did this was a New York lawyer called Arthur Rock. Arthur Rock was a lawyer from New York, one of the wealthy families. He came from a very wealthy family. He was a lawyer who understood some technology, and he was the guy who started three major companies which changed the world as we look at it today. First, a group of guys, along with a guy from Bill Schottky, the guy who invented the transistor in Bell Labs, started a company called Fairchild Semiconductors.
Right.
That was the first of the big tech companies. Now, there's a guy called Bill Noyce, and then Gordon Moore, and a gang of 8 or 9. Andy Grove is the most famous of the other three. So it's actually Bill Noyce, Andy Grove, and Gordon Moore together. They left along with the batch because they were not happy with Fairchild and set up a company called Intel.
So that's the origin story of Intel.
That's the origin story of Intel.
So
Arthur C. Rock
right.
was the guy who found 10 people to who chipped in with the cash to start with Intel. So and all these companies had a clear plan to profits. They were not burning cash like this today because those days money was real
Because of interest rates.
because of interest
Real
rates.
interest rates.
Real interest rates. So people had spare cash, about a group of 100, 200 people. They took the spare cash and invested in such big risks. All these companies paid off. He also was a person who could put a good board together.
Yeah.
In case of Apple, not only did he finance Steve Jobs, he also found that Mike Maruka, an ex Motorola guy, who would come help Steve Jobs on the board. Microsoft managed to find money because of Bill Gates' mother was involved in several charitable causes and was hobnobbing with the mighty and the wealthy. She played a role in raising money for him initially. So all the initial money was raised through personal contacts,
Right.
where people had some spare cash and were willing to take risks. As these risks paid off, and these companies became some of the largest companies in the world. Then came Alphabet. Now, Alphabet was only a Stanford University thesis, which two guys got together and started a company by putting some computers on
Yeah.
in a room. They continuously offered themselves up for sale. Yahoo being a famous one which declined. And they kept on getting money and they became profitable very quickly and started generating money. And then once they were generating profits, they started taking long shots. They took several long shots. Gmail is one big long shot where they solved this. They destroyed Hotmail. Microsoft had bought Hotmail
Yeah.
and they destroyed
Yahoo Mail.
yeah, they destroyed Yahoo, they destroyed Hot. They gave unlimited storage space. In fact, you dug into my Gmail account to go back to 2005.
Five.
You were 2 years old then. So, and you found some books which I had got from America at that time.
Yeah.
So, what I'm trying to tell you is, so Google allowed you to store that kind of
Yes.
storage space. They gave you free.
Even now they give 15 GB to all accounts for free.
Free. So, this is what. And then they bought YouTube.
Yes.
And they bought Google Maps. All these are acquired companies.
Yeah.
I don't know whether Gmail is acquired, but Google Maps and YouTube is acquired.
Yeah.
And they've really built on it. YouTube is really huge today. And then they developed Android. So they were a moonshot company. So they became a company which started to fund ideas inside.
Yeah.
So they then made Google became Alphabet, the parent, and it was funding moonshots.
Yeah.
Some moonshots have failed, some have succeeded. The other big guy in this is Peter Thiel.
Yes.
He's written a brilliant book called 0 to 1. They started with PayPal, and from PayPal came Elon Musk and Peter Thiel. Peter Thiel has funded several big companies. Notable among them is Facebook. I think Facebook and Twitter are the last two companies which looked at profits, which became profitable.
That is to have a road to monetization.
Road to monetization. After the mind-blowing success of Facebook and PayPal, and PayPal was bought by a company, eBay, and eBay was the first auction company. Even that became insanely profitable. And Amazon turned the corner, survived and became profitable.
Yes.
So when all this happened, this mad business of private equity started.
What about Paul Graham and Y Combinator?
He came much later into the play.
I think Peter Thiel actually helped Paul Graham, right?
Paul Graham to start Y Combinator. Y Combinator is much later in the day. He has had 2 or 3 big hits. Airbnb is one of them. But at the end of the day, all these companies had a plan to make money.
Yes.
But then also at that time in 2000, when the after the Y2K, you had an internet boom which failed. You had excesses.
Yes.
And once that excesses failed, Alan Greenspan, the famous Greenspan put, made sure money is free for everybody. So people started taking wild bets. Why are they able to take wild bets? Is suppose I have $100 million,
Yeah.
and then I have to pledge a portion of it for a very small interest amount of less than 1% a month at times, 1% a year at times. I can borrow money and put it in the casino, like private equity, by being a limited partner of a private equity company. And once I became a limited partner, a group of guys got together,
Yeah.
and there was benign conditions. So it was in everybody's interest.
To do this.
Swedish prisoner's contract, prisoner's dilemma. In game theory, there is business dilemma to cooperate.
Yeah.
So all of them cooperated to keep prices of private stocks
Up.
artificially high.
So you keep all their valuations high, as long as no one sells out.
Nobody sells out. No, there are only 10 or 15 companies.
Yes.
You keep playing parcel between you and keep on rising valuations.
Yes.
When interest rates became real, even before that, I think Uber, because of the CEO's behavior, I think they had to go public. The moment they went public, it dropped half in value.
Right.
And it's nowhere near profits, it's never going to make profits. In fact, SoftBank is going to sell its stock. All these companies today have no road to profitability.
Yeah.
And they've been burning cash. As long as interest rates are very low, banks are willing to fund these wealthy guys,
Yeah.
and they are willing to play the casino. Now, the banks are not in a position to fund. Interest rates are going up. The wealthy will pull out money. Buffett bought 5% of 5 conglomerates in Japan,
Japan.
using the same trick. So this trick,
Using the same trick.
he took a no recourse loan for 20 years
But that was from a bank.
from a bank at 0.18%.
Yeah, but here the whole point is that banks
No,
are.
they started with banks.
Yeah.
Then they raised so much money. They started playing footsie by lending one to other. You talked about a transaction of Zendesk. Why should you lend money to another company for it to buy Zendesk?
Yeah.
You might ask, if you think Zendesk is great,
Then you buy it yourself.
you buy it yourself.
But then the idea that you pass the liability on to the other guy.
Yeah, that means you're not sure.
Yes.
So you are saying, you take the risk, give me a fixed income.
Yes.
But what you don't see is, if Zendesk fails, this company has no way to return your money.
You give me your other money, whatever you have in reserve.
Whatever, but that
Your dry
will be very-
powder.
But it's not, all valuations will go down together. So you will lose it out.
Right. That is true. Stampede liquidity.
Now what happened with Zomato? Zomato raised money, it went to 170. It dropped to 50, it's gone up now. He's bought Blinkfist, that is Zeptos or whatever it is that.
Yeah.
Grofers, which is a bad deal. Zomato is never going to make profits. Swiggy is never going to make profits. And what happened here is, Swiggy stopped certain services even in Madras.
Yeah.
I think Speed Dairy or something like that. Even we used to get milk through that Swiggy thing. All that services were overnight stopped because they had to cut costs.
Yeah.
So, if you are doing cash burn and you have no path to profitability, you will sink.
So you brought up some interesting points. So I'll pursue the ones which I find the most interesting. So one data point I have is that almost 55% or little more than that of all PE transactions, that is private equity transactions, have been amongst each other. So is this an indicator of a bubble?
I'm telling you, no.
Yeah.
There is only a gang of them together.
Yes.
So whenever they want to increase the valuation, they will do passing the parcel.
Right.
Now, the interesting thing is in the case of Baiju,
Baiju.
an Indian tech firm,
Yeah.
which has not finalized accounts 1 year back. It's supposed to be illegal in India not to have finalized your last year's returns.
Yeah.
Not this year's returns, last year's returns.
Last financial year.
15 months
Yes.
return.
There's already been one quarter in this year and they still haven't.
Yeah, they have not finished
Yeah.
21-22.
Yes.
We are talking of 2021. Now, that company raised money at an insane valuation with 2-3 people.
Yeah.
The people have not put up the cash.
The people haven't put up the cash.
Two private equity funds
Yeah.
participated in that funding.
Yes.
Nobody has ponied up the cash.
To the other firm.
To the company.
Okay. So the company doesn't have the funds, although it's
You're
supposed to.
You're supposed to because you participated in that round.
So there's a big hole in the balance.
There's a big hole in the balance sheet. And they bought Akash from Blackstone,
Yes.
which is also
A $1.2 billion deal.
and which he has not paid the money. And Akash Blackstone is keeping quiet
Yeah.
because it knows that if he pulls the rug,
Then there are multiple other deals where they can pull the rug for them.
nothing. If they pull the rug,
Yeah.
Akash will become worthless.
Yes.
So you rather wait and get 1 billion.
Yeah.
So what I'm trying to tell you is, this case of Baiju itself shows you, this is a cozy club where one is passing the parcel.
Yeah.
As long as interest rates were low, this was working.
It was a benign condition.
It was a benign condition. Now that the interest rates are not settling down low,
You're going to be at each other's throats.
and if it goes beyond this period and lasts for more than a year,
Right.
a lot of these private guys will go bankrupt.
Right. And another interesting thing is that when these private equity, so there are two types of transactions which is jargon in the community, which basically says one is buying outside companies, one is passing the parcel. So H1 and H2 respectively. So even when you do buy a firm from outside and you infuse cash into it like Byju's, what it says is that the firm itself ends up acquiring another firm to show some sort of profits in the books.
Exactly, that's what Baiju did.
Right.
It bought White Hat Junior.
Yeah.
It bought Akash. It bought a series of companies. It bought a coding company.
Yeah.
And White Hat Junior is not making profits.
So instead of expanding your own operations, if your business model was proven and it was there was proof of concept and proof of this thing, then you should have expanded your own business instead of allocating that capital.
They use the capital to buy other business.
That's what. Instead of
Zomato, instead of growing its business,
yes.
went and bought Grofers.
Yeah. And
What is now known as Blinkit.
that shows that they don't trust their own business model.
There is no trust. The whole thing is a sham. They don't have a positive cash flow model.
Right.
For a business to succeed, even if you are not making profits, if your cash flow in 1,000 days is not positive, there's no point doing the business.
Right. So finally, I have a question for you. Is private equity a zero-sum game?
Of course, it's a zero-sum game.
It's a zero-sum game.
See, as long as liquidity is benign, interest rates are low, interest rates are negative real interest rate, private equity is a great game to play.
It's a positive sum game because there's so much liquidity sloshing around.
Yeah, that's positive.
Yes.
But the liquidity is drained out, interest rates go up, then you will have an equally negative game.
So it's a zero-sum game. For
Therefore,
you to
then
gain, the other guy has to lose.
lose.
Because money is now real.
Money is now real.
So I think that sums up our discussion.
Thank you for watching Be Rich. If you like this discussion, kindly subscribe to our channel and turn on the bell notification. If you do not turn on the bell notification, you will be not notified every time we put out a video. Once again, I thank you for your support for Be Rich. Good evening and welcome back to Be Rich. I am visiting the historic town of Trichy on the 27th of August. We are planning to hold a meeting in Trichy where I get to meet my subscribers and people who follow me on social media. This will be a live interaction with my friends, followers and subscribers of my channel. It is very interesting. We have had several events in various small towns of Tamil Nadu. If you wish to participate in that event, a WhatsApp number is given below. You may contact us on that WhatsApp number or you could drop an email to the address given below. My team will respond to you. I hope to see you in Trichy on the 27th of August at 6 p.m. Thank you for supporting Beat It. Good evening. It was decided to do an event in Dubai on the 23rd of September. It was a Friday. By popular demand, we have shifted this event to 24th September, the Saturday, so that it would be convenient for you people to attend. So I'll be in Dubai on the 24th of September at 6 p.m. Hope to see you in Dubai. Those desirous of participating in the Dubai event can contact us at the WhatsApp number given below or mail to the email ID given below. We will see you in Dubai. Kindly drop us an email or send a message on the WhatsApp number. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.